Hi, today we're going to be looking at how we can create purchase and also create purchase return. The purchases is going to be on product and services or expenses, and we're going to see how it affect the account and how the return also do affect the account. So the first thing is to click on the new button here and head down to, you have three options. You can go for expense, check or bill. So if you click on bill, we're expecting to buy this service on credit, so I'm clicking on bill. Now once we purchase this item, either product or services, or we incur an expense like operational expenses, then we would do a return. Then we'll see how it affects our books of accounts. So I'm going to be selecting Bob's Burger Joint. Now for Bob's Burger Joint, since there is burger, so let's go ahead to select product. So if you scroll down, we have two categories here. We have category details and we have item details. So I'm going to be selecting this. So click on the drop down. So let's say we are getting pump from Bob's Burger. So let's say we are getting 5 of this for 100 at 5, that is $500, and we're using today's date, 24th of February 2025. Now I'm gonna hit save and close. Then let's check on our report. Now since this is an inventory item, we're most likely going to check our inventory reports and other kind of reports. So click on report menu here. So I'm going to click on reports. Then we're going to go with standard reports. This. So first of all, we can go to balance sheets. From balance sheet, we can see our inventory level has increased. We would also see that our account payable has also increased because we bought on credit. Yeah, so these two things are going to increase the inventory level, and so but then we can see those in our balance sheet. So I'm just going ahead and click on balance sheet. Then I'll restrict the balance sheet to today's date, 24th of February 2025. So this to February, this. So I'm going to run the report. Now once I'm done running the report, account payable, we'll look for account payable, which is this. So I'm going to click on this. Let's see if we have Bob Burger for $500 dollars. Okay, I click on that again. Then after the account payable, we are still going to come to the inventory section to check if we increase the value of our inventory by that $500. Then we'll also go and check our stock status, to see the quantities that increased. So you can see over here we have the 24th of February bill for Bob's Burger. Okay, $50. Then from here I can see the inventory asset account. Now from the inventory asset account, we're also going to see the addition of this amount. So this is what happened. Okay, 50, not, so it's supposed to be 100 as 500. Yeah, save and close. We use 500 initially, so let's check if that is has been corrected. In the English reports, I'll refresh this. See the updated reports. So this should now reflect $500 for the additional inventory that was purchased on credit. Okay, so it's now showing 500. Okay, so you can go back to the report. Go back again, then go back one more time. So click on balance sheet. So we are going to locate the inventory. So we have inventory assets. I'm going to click on that. So we're going to see how it also affects the inventory asset account. Over to the bottom here, you see we have Bob's Burger and it's $500. It has also updated the amount. It has increased the amount from $596 for inventory to $1,096.25. So I'm going to look at product and service lists. So to check the inventory balance for the pump, you can go straight to inventory valuation detail. Then it's going to show us the quantity we have and the costs and the method for valuation. Now the first option here we have pump, 24th of February. The bill from Bob's Burger Joint, 5 was purchased at the rate of $100, $500. Quantity on hand before the 5 was 25. Now plus the 5 we have 30. So this is now the asset value using FIFO cost for the costing. Okay, this is the quantity. So let's go ahead and make purchase for services. So in order to do that, so still go to new. We're going to select a new vendor this time around. Then we'll do the same just like we did for products. We can also do for services. So we're going to select a vendor. So let's say we select the second vendor, and then books by Bessie. Then I think we have this account. So I'm going to delete that. I'm not going for expense. We want to show same for service. Okay, so let's deal with that. Then we'll come down to service, product and service. So we're going to select a service. Okay, don't think we have any service here. We can add new, but let's just go with expense then. So we'll select on this and let's go for disposal fee, and this should be 700. Just using this, so there's no quantity, just disposal fee. Okay, and the bill date is this. The due date is same as today, so I just use that. Okay, then save and close. Then I'm going to check for Bessie, books by Bessie, to see so this is inventory. So we're going to go out of inventory. So let's go to reports, and okay, so you can go back this way. So we're going to go with balance sheet, or come to what you owe, the account payable. Yeah, so I'll just go with balance sheet. Now from the balance sheet, I'll try to restrict our debt to 24th of February 2025. So now we are going to account payable. Remember, this is not inventory, this is an expense. So we are going to go for account payable, and also we are going to generate our profit and loss to see the expense that was incurred. Then we'll now go ahead and do a return for the both of them. It will also show us how it affects the account. So you can see we have booked by Bessie 700 and we have the inventory 500 1.2. These are the transactions that occur for 24th of February 2025. So let's go to profit and loss. So just go back. Go back one more time so we can access the standard reports. So let's go ahead and click on profit and loss. This report, we're going to also restrict it to 24th of February. So let's run the reports so that we are left with. So from here now you can see that we have disposal fees expense of $700. So this is also correct. So let's now go ahead and create a return. So in order to do that, we click on new. From vendor, there is vendor credits. So let's go ahead and click on vendor credits. So this is where we'll record the purchase return. So we're going to select Bob's Burger Joint. We're also going to select the product. So click on item and select this pump, the pump. Then we have it as 5. If it is the 5 that you will return, you have it as 5. Then 400, I think it says about this price, 500. Okay, so you hit save and close. Now you've returned. This is a vendor credit. So let's also return that of the expenses. So click on vendor credits and also select books by Bessie. Then we're going to select the expense item that we incurred with this. I think it should be disposal. Then at 700. Okay, at 700. So we're still using the same date. Let's see if we are using this. Okay, then save and close. So let's now go and see if we can see this account payable showing on our report. Now over here you can see our disposable fee is 0. Okay, 24th of February, disposable fee is now 0. So we can still go to report and go for standard reports. Let's also check our account payable. Let's see if we are still owing either vendors. So we're going to click on balance sheet and check the account payable to see if we are still owing these vendors. So scroll down to account payable. So I'm going to click on this. Then I'm also going to select the date range. I hope it's still in the same date range. Then we'll see if we are still owing these vendors. So because we've done return, so we're not supposed to it's not supposed to count on us any longer. So let's check for the end, 24th. So these are the two vendors, 24th, Bob's Burger and this. So let's see if we still have that amount. So you can see minus, the balance is now back to 1.602. So 500, 700 minus 500 minus 700. So we're still going to go for the inventory. Let's see if we still have those inventory we added. I think 5 of them. Let's see if we still have them. So go back again. So check our inventory valuation detail to see that we don't have that inventory any longer in store because we've returned those inventory. So come down to sales and customer, inventory valuation detail. Then we see the report. So we still have 24th of February. So let's see for pump 25 initially, 5 came in and 5 is out. So we are back to 5, right? We are back to 5. So This is how you create credit purchases for inventory and operating expenses, and how to also create a return in the case where those services are returned and you're no longer in the position to pay for those services.